Alan, great to have you back. Good morning.
Morning.
I thought of you because Goldman has a note out today essentially arguing that the consensus for peak Fed funds is not going to be enough to drive the economy into a recession, and their recession forecast is below consensus. Sounds like something you might have written.
I don't think so. I agree half with it. I think the odds are certainly greater than 50% that we'll have a recession. What I've been writing and speaking about on the air is it's shaping up probably to be a mild recession. And part of the reason for that is I don't think this FOMC is going to go crazy and raise interest rates way, way up. They are going to go up for sure. But I think they're going to keep one eye on the economy, or maybe an eye and a half on the economy in addition to the inflation rate. So I guess I'm 50-50 with Goldman and 50-50 with not.
Yep. So does that balance come into view at this coming meeting and presser, or is that more of a function of 2023?
Well, I think December. I don't think it's coming into view for this meeting. Look, this meeting is going to put, presumably the 75 basis points are going to happen. I certainly think so. Everybody thinks so. That'll put the upper limit to 4. Once you get to 4, I think the Fed was rightly in a hurry to get to 4. Once you get to 4, it's worth thinking about seriously about how much higher you want to go. Probably somewhat higher, but if you're galloping along at 75 basis point increments, you're going to get very high very fast. And I think I'm expecting Jay Powell, maybe even the statement, though it's a little hard to do in the statement. I'm expecting Jay Powell in the press conference to tone down expectations that the Fed is at 75 basis point increments forever, and to sort of hint that a slowing in the rate of increase, not stopping, a slowing in the rate of increase, as Steve Leisman was saying, is in the offing right away.
So then just to dig into that a little bit more, Alan, this idea, as Mohamed El-Arian just laid out in Steve's report, this idea of redefining the term pivot and the fact that this is less about a fundamental effect and more about a liquidity effect as the Fed continues to tighten. Do you see it the same way?
You know, I never quite understand what distinctions like that mean. You know, markets want to pivot on every tidbit of news. You know, if you told the markets that instead of 75 basis points, the Fed was going to do 69 basis points, you know, they would go nutty and have a pivot or something like that. I don't see this as a pivot. I see this as the next step in I'm going to say well thought out. I hope it's well thought out. We'll see if it works. Strategy. You don't keep going at 75 basis points forever.
Do you think the Fed should be including more data in its data dependency right now? I mean, I know there's a lot of focus on some of the readings we'll get at the end of this week, but given some of the discussion, at least from a market perspective, on, for example, shelter prices and this idea that maybe some of the stickier aspects of inflation have already peaked, should the Fed be, I guess, expanding its horizons in terms of how it's making its assessments?
I don't think so. I think from the outside, it's very hard to understand how wide those horizons are. The Fed has over 200 PhD economists working at the board, never mind that the reserve banks, they look at everything. If you're a member of the FOMC, as I once was in far ancient history, you are bombarded with data from the staff. Look at this, look at that, let me show you this. So I don't think it's a question of anything you can think of they're looking at, I think, unless there's something really strange.